One of the other big questions in your business is, okay, if I'm going to invest $1 million in your business, how do I get my money back? What's your exit? How do I get, there's got to be some kind of event, call it a liquidity event, where either you sell your business. In the past, it's been very desirable to take your company public for an IPO, initial public offering, where others, the public, can buy shares in the business. So if the investors paid $1, the public pays $15, and that investor's shares go from $1 a share to $15. If they bought 1 million shares, they've made a lot of money. So that's a beautiful thing. It's just that these days, right now, IPOs kind of questionable. Certainly, the idea of someone acquiring your company, you might think about who would be the likely acquisition candidates. In fact, some people build businesses specifically to be acquired by certain companies because they know that company's going to want it. So they look at how they set the business up and enable them to the company could acquire it, and all the systems you use to build a business are the same systems that acquiring company might use. So it makes it very easy for them to roll your business into theirs and buy you. So think about that kind of a thing. So you want to think about, who are the possible acquirers of your company. And the third thing, because the IPO, you could say, well, IPO, I would say, well, it's certainly an option, but you got to acknowledge that it's unlikely, or certainly in this marketplace, unless extraordinary circumstances that benefit your business specifically would enable you to go public, where, the market's just right. Wow, you could take it public, but I wouldn't bet on that. I wouldn't dwell on that much in the conversation. The other exit possibility is, you could design your deal where you could conceivably buy the investors out. But the investors need to make their money. They need to know that there's a way that you've designed to get out of this business. And that's not to say you're going to quit and leave and run for the hills. You're just saying you want to get them out. They need to exit them. They want their money back. And the first thing, I've said this before, is that they want to be sure that their initial capital is protected. So some way of getting their initial capital back. If you can figure a way to pay that initial capital back immediately or sooner, do that, and then the money, the upside, the return on investment, they can be a little more flexible. That can come at them in different ways over time. So some way, how is this investor getting their money back? And you've really got to respect the fact that they're putting money into this. A little bit of an aside here, but the fact that they're risking their capital, they could retire on this. They cannot really afford to lose this capital. Yet at the same time, they're big boys and girls. They recognize the risks in these business. They recognize what a small business is about. They recognize what you're doing, and they're writing you a check because they believe. And that's really what your business plan is all about, is creating a case where someone can believe. And at the same time, you've done the best you can to build a business plan that makes sense, the best you can to build a business that will return on investment. And this is what you're showing them at the end of the day, how they're going to make money on this business, and they need to see really what your plan is for getting them out of this and getting their money back to them in a wonderful multiple of probably 5 times what they put into it at least.